I mean, when it comes to SDAO, okay, and my call options in regards to that, right? Whenever I'm doing these hedges, my plan is, that basically they're going to expire worthless. If they expire worthless, that means the market likely did very, very well, which means likely I made a ton of money, which is exactly what's happened this year. It's been ridiculous. It's been probably my best money-making year in terms of portfolios being up since, maybe 2020. To be honest, it's been extraordinary. But my hope is my SDAO to print money over the next 60, 90 days. And here's how that would work. If, let's say, we actually saw the Dow go down like 10% over the next 60 days, that would mean SDAO would likely be up 30%-ish, right? It's usually like a 3x on the daily move, and it doesn't keep up perfect, so that's why I see 30%-ish, somewhere around there. SDAO would move likely up, okay? Now, my call option contracts in that sort of scenario, if that happened over the next 60 days, for instance, my call option on contracts would appreciate anywhere from between about 90% to about 250%, okay? So that's why we're talking about substantial amounts. That's why I'm wishful, not just from I want to buy shares for cheaper, but the amount of money I could make on my hedges over this next 60 days, if that happened, would be obviously astronomical. And then I would have all that money ready. I'd cash out of that baby, and I'd get ready for my 2024 hedges. So that's why I'm very, very hopeful and wishful that this was to happen. I'm not convinced it's going to happen, but I'm hopeful it at least happens, right? And remember, those options contracts expire January 2024, right? Which I'd be able to sell to somebody for some very nice profits. I don't need to push it all the way to January 2024. I'd be happy, if those SDAO call options printed money over this next, 60, 90 days, be happy to cash out of those in August, September, October. I don't need to hold it all the way to January 2024. I'd rather get out of those, sell them to somebody else, and they can ride those babies to January 2024. And if they do great, great. I don't need to take that sort of risk. Plus, I would like to re-hedge for 2024, likely around September, October. Maybe November, December, I could also consider hedging at that particular time. But that'll depend on many various factors. So that's my hope, man. That's my hope, and that's why I'm kind of, hoping the market slides. But ultimately, it would make for a much healthier market. And, also, one last thing I'll point out here is when it comes to that healthiness, it keeps the bulls at bay. When you have a nice size pullback, it keeps the bulls at bay. Meaning, essentially, sometimes the bulls can get too bullish, right? And start feeling too much FOMO. If the market's just moving up in a straight line, it leads to FOMO in the market. People start saying, whoa, man, I'm not making enough on my shares. I'm only making 50%. My friend over here is making 200% on call options. I need to start playing call options. I need to start doing this. And, obviously FOMO starts to build in. You start to build in a lot of unhealthy habits in terms of the way you're looking at the market and only thinking about the reward potential. Pullbacks, I can tell you, in my lifetime, the healthiest markets I ever went through had nice pullbacks of 5 to 10% in the indexes, where it would shake around. People would kind of get a little worried about whatever they were worried about at that particular time, and then we'd start on our next move upward. It was a very healthy market. And so I don't feel comfortable in markets that are straight up. I want a market that, goes on a nice run, pull back. Goes on a nice run, pull back. Let the longs add some nice size positions in, people like myself. Let the bears think that they've taken control of the market, set a lot of bear traps up there, and boom, we make our next run. Then we do a little pullback. That's a great market. That's a very healthy market. And that's much of the market that we went through from 2010 all the way through to 2020, right? I'm talking about right before Rona. That was a market we had. We had a lot of incredible runs. I'll pull it up for you guys here. We had a lot of very nice, incredible runs with some very nice pullbacks in that decade. And I considered it one of the most beautiful decades to be an investor that you could ever find here. We'll pull up 5-year and then we'll try to go back in time here a bit. From obviously 2009 was like straight up in a straight line, right? But from 2000, so it's S&P 500, 2010, this kind of shows you, the S&P 500. And obviously the trend over the decade was up and up and up, right? But we had nice pullbacks here over time. These are all, usually 5 to 15% type pullbacks here in the indexes, and all this shakiness, but ultimately, where were you going? You were going up, right? But these were all times that could shake out weak hands or cause people to kind of freak out a little bit, and it was great. And this was the major crash we had, which was around December 2018. That was vicious to go through. It was very vicious to go through. Yeah, man, I got hit pretty hard in that one, and then we came back and we prospered. But that's the type of market I like, man. That's what I love. That sort of market right there, man. That's beautiful. That's beautiful. Look at that. Tell me that's not a beautiful. That's the most beautiful market you can imagine right there. If we could have a market like that for the next 10 years, I'll take it in a heartbeat. I will take it in a heartbeat. That's the sort of market I love, man. You get these nice pullbacks. Sometimes they last for a few weeks. Sometimes they last for a few months or a few quarters. And then you start your next run upward. That is so perfect, man. And that's the type of market I hope we get into over this next 10 years. That would be my hope overall. And it starts with having hopefully a nice healthy pullback here in the short term. So I don't know if you guys saw the price action today. Some stocks are doing absolutely tremendous, right? You got Tesla stock making a 5% plus move here today. So all of us Tesla shareholders are looking great today. PayPal, which is the number one stock that's been my focus for buying here, at least over the past month or so, making a very nice upward move here today, about 3.7%. Elf on a Shelf's having another great day, but this is another day for Elf. RH doing well. Then you look at something like SDOW, which is a 3x leverage ETF against the Dow Jones Industrial Average, which is up very nice, which means the Dow was obviously down at least a few hundred points here today, right? Meta up once again. SH is up. That means the S&P 500 is down here today, right? Now, you go ahead and look at these safety stocks. Safety stocks, a lot of Red Dead Redemption out there here today, right? And these safety stocks, these have never been safe. Okay, they've never been safe. They're looked at as safe, and the market thinks they're safe, but the reality is they're not really safe, okay? As somebody that's went through hard times before, people think like, oh, Campbell Soup's going to do well if people are in hard times. No. We're going to eat ramen noodles that are 15 cents, okay? We're not going to eat flippin' flapjack and $3 cans of whatever they put in that Campbell Soup stuff, okay? You think we got money for jelly if we're going through hard times? No, we'll eat a syrup sandwich, okay? You think we're going to buy name brand ketchup and mustard? Come on, man. You think we're going to buy name brand toilet paper and paper towels if we're going through tough times? No, we're going to get the cheapest one on the shelf, the store brand stuff, right? And so, just keep in mind, a lot of times they say these are safety stocks. People put money there, but they're not actually nearly as safe as people. And I got sucked into this, okay? Something a lot of people don't know is when I first got in the stock market, because I was getting in the end of '08 into 2009, guess what? I got a story for you, okay? The guy you're watching this video, I got sucked into these stocks in my first year. I invested in so many of these stocks that are supposed to be safety stocks, so many of them. And meanwhile, I watched the indexes roar. I watched countless stocks go up 50%, 100%, 200%, 300% over the next 12 months after I got in the stock market. And meanwhile, while my stocks were there, 3% gains, 5% gains, but I was like, oh, this is supposed to be safety. Like, these are supposed to be the good stocks, okay? And just no, okay? But that always sucks a lot of people in, thinking like this is a safe place to put money. No, okay? And especially as you start to get the market to go any sort of positive momentum, oh my gosh, these lag such in a meaningful way that you're like, why did I ever stick money in them, okay? Why in the world did I ever stick money in them? You look at the Dow here today, a lot of stocks in the Dow getting hit pretty hard today. Intel was down nearly 4%. Nike down another 3.5%. Nike can't do anything right now. Boeing, 3.5%. Boeing's a nightmare stock. This is, a lot of people have asked me over time, Boeing, this is for years. And there's just a nightmare stock, man. Every time you think it's going to go well, it goes bad. That's why I'm just like, I'm okay without Boeing, okay? You got Chevron down about 2+% here today. Goldman Sachs got hit pretty hard, and this matters significantly for the Dow Jones Industrial Average because I believe Goldman Sachs is the second biggest weighting in the Dow Jones Industrial Average, only after United Health. 3M, another stock a lot of people ask me about. 3M, not interested. They're in a massive lawsuit situation right now. I don't want any part of that, okay? Oil and gas stocks, the ones everybody wanted to flood into, and all the Wall Streeters like, oil and gas stocks, oil and gas stocks. These stocks are just can't get out of their own way. And then you look at another day like today, just Red Dead Redemption across the board out there. To put this in reference, this is just year to date. Look at a stock like Devon Energy. It's down about 17% year to date. NASDAQ's up 31%. A stock like Tesla's up 153%. I never understood why people like to flood money into these, plays that just, who wants to be in oil and gas stocks long term? Like, seriously, I just watched so much CNBC and stuff and all these Wall Streeters talking about oil and gas stocks last summer into the fall time. That's where you need to be positioning into. And I'm just like, why? You got governments around the world all trying to move to sustainable energy, pumping tens of billions, hundreds of billions of dollars out there. They all want to move to solar, to wind, to battery technology to be able to capture the energy. They're all trying to move to renewables. And so you got the whole world wanting, even in the Middle East, they're trying to do that, and that would be the last place you would think they'd want to do it. Everybody's trying to move to renewables, and yet you want to be in something that long term is not a good place to be. Like, that just doesn't make financial sense. Of all the places you could put money in the market, you'd rather go against all the governments of the world that are doesn't seem very interesting to me. Okay, does not seem very interesting.